Good afternoon. Getting right down to business here. We're doing it live and doing more at 4 weekday afternoons, right when you need it, right after Guy Benson. And just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money. We're live on the air, 790 KBC. Streaming live online worldwide at kbc.com. And you're on demand, Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, and all your favorite podcast platforms. And we are doing it live, even though the voice is a little bit strained today. A lot to talk about given the big market moves. The Dow Jones Industrial Average up by nearly 3,000 points. Yep, you heard me, closing up nearly 3,000. It's most ever for one day after President Trump's 90-day pause on most reciprocal tariffs and a surprisingly strong U.S. Treasury bond auction. The Nasdaq Composite and S&P 500 also making Wall Street history today with the biggest one-day point gains on record. The Nasdaq having its best day in 24 years, while today was the S&P 500's best day in more than 16 years. Followed the bouncing ball, the Dow rose nearly 3,000 today, up 2,963 points, or a nearly 8% gain to settle at 40,608. And that exceeded the 2,112-point gain we saw back in March of 2020 when the market rebounded during the COVID pandemic days. The S&P 500 saw a closing gain of nearly 500 today, a gain of 9.5%, settling at 5,456. And we see the Nasdaq jumping nearly 1,900 points today, a gain of 12% as the tech names roared back, closing out at 17,125. That was the biggest percentage gain, by the way, for the Nasdaq since January of 2001. The yield on the 10-year note is back up to 4.36%. The volatility index, the Wall Street Fear Index, sank 36%. In fact, the volatility index was exceptionally volatile today, living up to its name. Several exchange-traded products that track swings in that volatility index were themselves halted for volatility after President Trump announced a 90-day pause on some tariffs that were previously announced. Gold also saw a wild ride. Looks like gold had popped above 3,100 an ounce once again. Prices had already gained quite a bit during the regular session. I'll discuss gold's big move with AXEL MERK this hour. AXEL MERK, the president and chief investment officer of MERK Investments, which includes the MERK VanEck Gold ETF. He's also author of Sustainable Wealth. He'll be joining us live later this hour. Crypto is also seeing a wild ride, but ending mostly higher today, or higher at the moment, I should say, with Bitcoin up about 7,000. Above 83,000 once again, and some of the meme coins also were along for the ride. Doge, XRP, Ether also higher. Solana popping as well. And Fartcoin, never thought I'd even say it, surged more than 40% in the last 7 days and up around 250% over the past 30 days. Now, the latest reading on consumer prices will be big news this week. We'll see how big it is compared to the tariff news. We'll be getting a new reading on the Consumer Price Index. That'll be coming out first thing tomorrow morning. I see stock futures, by the way, pointing higher ahead of the opening bell tomorrow. All of this after the steepest multi-day slide in Wall Street history over the past week. I will discuss what might be next for President Trump's tariffs plans and the economy with an expert on that subject, and that'll be the one and only Ben Stein, who's set to join us live later this hour. Economist, attorney, author of numerous books, and especially famous for playing the economics professor in the movie Ferris Bueller's Day Off, where he gave a lecture on, you guessed it, tariffs and trade policies in one of the most famous scenes in American cinema. That clip's been going around the world lately on social media. The one and only Ben Stein will be joining us live later this hour for an update on trade policy and his view of things. But first, on your money, the markets, the economy. Joining us live now is veteran investment expert Jim HAUSBERG with Hightower Advisors in Beverly Hills, the HAUSBERG Group. Jim, great to have you with us on an update here for a change.
Well, thanks for having me, Frank. And it's not just an update, as you said. You stole a lot of my thunder, Frank, with all the ups and the percentages and the biggest gains in 16 years, 20 years, 24 years. An incredible day, incredible volatility. Markets just move so fast these days, Frank, that this could be the shortest bear market in history based on where we closed yesterday. So that makes it a one-day bear market if it hangs in there. But it was good to see. We finally got, a dose of relief. The idea to, pause the tariffs, the reciprocal ones for 90 days, I think was long overdue. I think that was sort of set into Trump's mind when the bond market started backing up instead of rallying, because one of the thoughts behind, the tariffs was that it would slow the economy down, and then Powell could lower rates. Well, rates were moving up, and there was a big funding today, as you said. So I think once the bond market backed up, I feel like Trump's hand was like, hey, we got to do something because we've created a little bit of a crisis here on a global basis. So anyway, we got the relief. I think the worst case scenario is off the table. We still have to battle with China. We'll see where that goes. But I would make a bet that the lows we've seen are now in place. And, let's see where earnings come in, and let's see CPI tomorrow and a bunch of other barometers.
And that's, of course, been the big question the last several days. Have we seen the low or not? And what kind of calls have you been getting lately, by the way, in the face of that vicious sell-off last week and into early this week, and now this big relief rally?
Well, we've been talking to our clients quite a bit, and I just don't say this because we're on the air, but we didn't sell out of any positions. We remained long. We have our bond portfolios, which gave up a little bit. Obviously, we've taken big hits in the equities that we've been holding because there's been nothing spared, Frank. Every sector down, pretty much close to double digits. Large cap, small, foreign, all down. So we hung in there. We're very happy we did because we are long-term investors. We always say it. And because it's been said on the air, if you miss the 10 biggest up days, your long-term returns go way down, and this would have been the biggest. So people who sold out yesterday or last week, lightening up, fine, we understand why. But boy, after a day like today, you look back and think, I really left a little bit on the table. I should have hung in there.
Absolutely. You remember the days when the Dow itself was about 3,000 points, and now it gained 3,000 points. Did you ever think you'd see a day like this?
Well, I remember, Frank, when it was 800. Wow. So, yeah.
That's when rocks were new.
80s, right?
Wow.
But that's when it was. And that's why, a move like this is just, again, percentage-wise, it's big. Dollar-wise, I don't get too caught up in it. But 7.8 up in the Dow, 9.5 on the S&P, 12 on the NASDAQ. These are returns we never thought we would see in a given day. So to your question, no, I never thought I would see it like that. But it moves quick. As soon as that headline came out from the administration or Trump himself, we were off to the races. Now everyone's trying to figure out earnings. And the thing that's interesting about where the market was trading was people were, figuring in a recession for several quarters. Estimates for the S&P were like disappearing, and, people couldn't figure out how to model these companies and what might have their impact. But prior to that, the earnings looked to be up 10% this year at 275 for the S&P, and at 20 times, you're in the 5,500 range. There was earnings estimates next year for 300 a share. At 20 times, you're at 6,000. At 22 times, 62, 64. I don't know what the numbers are going to be, but obviously that's what's going to drive the market into the second half of the year. And again, this is a 90-day pause, so I just don't know what's coming after 90 days, and I don't know if anybody else does. Obviously, he's keeping the 10% global tariff in place. He's keeping the tariffs on autos and auto parts at 25, and I think aluminum and steel remains intact at 25, all probably negotiable. And, of course, the trade war, back and forth every day, I don't know how that plays out.
You're talking about a pause that refreshes. Certainly a big refreshing news here for the stock market here today with that 90-day pause announced. What about the volatility index, which plunged 36% today and in itself had to be halted for volatility? What about these various volatility plays, including the VIX index, UVIX, and other ETFs that track volatility? What's your guidance on those?
We stay away from them. A lot of halted trading in the middle of the day. It's just not something we do. I guess some people have, want to take a lot of risk, and some probably made a bunch of money, maybe gave it back, who knows. But we stay away from those things. They're too volatile. They're 3 times levered, and so at the end of the day, if the market's down big like it was, they've got to be 3 times levered again. And if it keeps going down, or if you're playing it the other way and it keeps going up, it could be a pretty good return, big. But once that thing goes against you, you're finished. And it's just way too risky for me and my clients. So Interesting to watch, but not a great place to invest. Too much gambling for me.
All right. And, of course, as you know, we speak to the biggest fans of crypto here as well as the harshest critics. I want to get reminded where you weigh in on the cryptos here with Bitcoin, seeing its big rebound today above 83,000. It was in the low 70s earlier today.
Yeah, it's interesting you bring that up because I looked at Bitcoin this morning and, with all this risk off, I would have figured that Bitcoin was even lower. And then it started coming back. And obviously after the announcement, it rallied a lot. But once again, you ask me this whenever we're on, and I always don't mind answering it. I can't figure out the value. The volatility is big. It seems like a great trading vehicle if you can catch it right, because you do get 7, 10, 15, 20% moves. But I'm not a bear on it. I'm not a bull on it. We just don't own it. Too hard to figure out the valuation. And if anybody has a good way to figure it out, I'd love to find out.
All right, well, stay tuned because we do talk to those folks here as well. What about the Mag 7 names, which also saw an impressive rebound? NVIDIA up 19%, back to 114. Tesla on a roll today, up $50 and change to 272. What about those names and the other names in the Mag 7 list?
Well, it's interesting you bring that up, Frank, because the numbers there were just huge today. These are the stocks that have been hit the most. So if you're looking for a market to rebound, a lot of people have been buying defensive stocks, utilities, consumer staples, your Procter & Gamble's, your J&J's, various utility companies, safe, dividend payers, low PE. And those have held in there. But if this market came back like it did, it's the names that got hit the hardest that are going to rally the most. And the numbers coming out of these Mag 7, except Tesla has its own issues, AI is not going anywhere. I would say this, though, about them. Overvalued at the end of the year, clearly due for a correction. I think it got oversold with the tariff news, although there could be big impacts for Apple and others. So from that standpoint, I get it. But you take the correction because of the tariffs, you take the valuations on these at the end of the year, not surprised to see them down. But with today's move, not surprised to see them rally as much as they did.
All right, and we also saw oil rally from its recent low. What about oil, and are you touching any oil right now?
Not really. I mean, I like the dividends on the big names, but again, not something we really play in. I've said this before. If you look at the long-term charts on oil, it has not been a great place to be for a long period of time. It's a very small percentage of the S&P. Tech is obviously a lot bigger. But, you can get a bounce. Some of these names were down so much with the price, I wouldn't be surprised to see a rally. Everything was up today, Frank. Nobody missed it. And just like last week, everything was down. Nobody missed that either.
Right. And today's a good day for you to be on. Certainly. We've had you on in all scenarios, by the way, and you hit it right today, Jim. Yeah. And what about gold? We're going to be talking gold here with AXEL MERK, a familiar voice to many of our listeners here.
Yeah.
Gold back around 3,100. What about precious metals here?
Yeah, well, it's kind of surprised to see it give up a little bit, but it's been up so much that it had to give something back during the sell-off. But it came right back today, so the trend is higher. I think gold goes higher. The charts tell you it's going higher. But again, not something that we really invest in for most of our clients.
All right, and let's see. Let's go right down the list here. We have watching what's happening with the airlines, which took a huge hit recently over tariff concerns. Delta roaring back, for example, of about 24%. What about the travel names over the next 90 days or so?
I'll tell you, Frank, it concerns me a little bit because, I'm just talking to people who do a lot of travel, and people are concerned and not wanting to go to Europe, being American, and you read these articles about people in Canada not wanting to come to the United States. I don't know. The airlines to me are trading stocks. If you catch them right, you can make money, but you got to trade out of them. Again, looking at long-term charts, airlines don't really do it for me. The cruise ships, I think, are better. They've continued to do well, but both will benefit from lower oil. So that's an important feature for them when it comes down to their margins. So obviously they're probably buying, oil at much lower prices, maybe locking them in. It could be a benefit to the airlines over time. But, Delta, I don't know the story, but I did see that it was up today.
Right. Energy sensitive, certainly, the whole airline group. Absolutely. So what do you think is going to happen tomorrow, by the way? We see stock futures pointing higher, and you think the worst of this is over, like you said at the beginning. What do you think is going to happen tomorrow?
It's going to open at 6:30 our time, Frank.
That we know. There's no uncertainty there, right?
That I got. I think it continues. Again, I don't know what news is going to pop up overnight. Neither does anybody else. But, with this in place, the volatility is going to hang out. Everyone's got to redo their numbers. People are starting to figure out how bad Apple's earnings are going to be, and maybe they're not going to be as bad. Microsoft, same thing, and the AI stocks. People have to go back and, make certain assumptions. But what's troubled a lot of Wall Street analysts lately is that they couldn't figure out the models because they didn't know how hard these companies were going to be hit. You got to remember, these companies import from all around the world. And all of a sudden, you're in business one day, and the next day your costs are up 30, 40%. You got a small business or even a large, New York Stock Exchange listed company. When your costs go up like that and you have parts from all around the world, your supply chain is upside down. And that's why markets were selling off the way they were, and that's why the bond market started selling off. So we got a little bit more certainty, a little bit of clarity for 90 days plus, hopefully. And, if that's where things stay, I could see us moving higher. But we're not going to be up 11 or 10% tomorrow. But if we are,
what about the bond market? What about the bond market?
We saw done today. Yeah.
Yep.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of The Sean Ryan Show.
September 11th happens. What is the first thing that went through your head?
September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope? Just learning how to find a new normal.
One of the most tragic events in American firefighter history. You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
Yeah, no.
What about it? And the volatility is unusual. The volatility is unusual, and where would you be placing your bets here? And that, is that 60-40 model still working here?
Yes, it is. I've been telling you I like bonds for a while. You get that 4% in Treasuries, maybe 4.50. Muni bonds have sold off too. So for your tax-exempt buyers, that market looks pretty attractive to me as well. Upwards of 80% of Treasuries, and you get it tax-free. So the returns there look pretty good. Again, I don't know if all this uncertainty is gone after today. Like I said, it's a dose of relief. The worst case is behind us, I believe, and I think the lows are in on the stock market. But, it's a volatile time, and uncertainty is the most Googled word lately. So I think you have to stay tuned. But again, I just have to emphasize to everybody listening, you got to be long-term investors in this business. The short-term stuff is too difficult. You can get scared out. And for those who hung in there, they got rewarded today. So that's my advice. It's nothing new. So that's what I got for you.
Yeah. Before we let you off the hook, any specific places where you are putting money now and or taking it off the table?
We are not taking money off the table, and I can't say we've been buying with both feet in there, but really holding on to what we have, and that's worked out well today, and it's worked out well for us in past drawdowns. I still like dividend-paying stocks, and I still like dividend growers. Those to me are the best companies because they're reinvesting in their businesses while also paying a dividend. If you're able to pay a nice dividend, you should have a pretty good stock during tough times. So that's my advice today. Stay with dividend payers. If you want to look for bigger ups, you can look at technology. It's still down quite a bit from its highs. But be prepared for volatility. You never know what the next headline is going to be out of, this administration and foreign ones as well. The China story is not over. I can't really figure out the impact of such high tariffs, but it's not good for either country. Hopefully cooler heads prevail.
Terrific, Jim. Well, thanks for being part of this historic day on the air right here on Mottek On Money on 790 KBC. That is veteran investment expert Jim HAUSBERG with Hightower Advisors in Beverly Hills, the HAUSBERG Group. Jim, thank you very much. I'll let you get back to your important work. Thanks for taking the time to join us here live this afternoon.
It's a pleasure to be with you, Frank, and all your listeners. I really appreciate you having me.
Thank you very, very much. And let's get right out to the freeways now. Gorgeous afternoon here in Southern California on 790 KABC. Mottek On Money continues 790 KABC. We have a big winner on Wall Street today with the Dow up nearly 3,000 points at the closing bell. Yep, you heard me. Up 2,963 points to 40,608. The S&P 500 up nearly 500, up 474 points at 5,457. And the NASDAQ gained 1,857 points at 17,125. The stock market popped during the trading session after President Trump announced on social media that he would impose a 90-day pause on most reciprocal tariffs. And we also had a surprisingly strong U.S. Treasury auction. The yield in the 10-year note moved to 4.36%. The volatility index, well, lived up to its name, volatile, down 36% today. It's some of the volatility vehicles had to be halted for volatility, ironically. Cryptos also saw a wild ride today with Bitcoin popping nearly 7,000, back to 83,069 here at last check. Ethereum up around 1,672, and Doge at the moment at 16 cents. The price of gold also got a big pop today. We'll be talking gold with gold expert AXEL MERK will be joining me live here shortly. Tesla in the plus column today at more than $50 at $272 and change. NVIDIA up more than $18 at $114 and change. Apple also on the rebound at more than $26 at $198.85. MicroStrategy, that's now known as Strategy, that's the one that's big in the Bitcoin, moving higher by nearly $60 at $296 and change. And now the latest news in 790 KABC. Mottek On Money continues 790 KABC. Gold back above 3,100. Let's bring in the expert on that, and that is AXEL MERK. AXEL MERK, the president and chief investment officer of MERK Investments, which includes the VanEck MERK Gold ETF. He's also author of the book Sustainable Wealth. AXEL MERK, thank you very much for joining us on this history-making day in the financial markets.
Quite a day. Good to be with you.
All right. As far as gold is concerned and the big announcements, last time you were on, you advised people buy popcorn because of the interesting times we live in, and certainly it seems like a movie that's playing out here. Give us your reaction to these latest epic developments.
Yeah, I didn't caution that too much popcorn can cause an upset stomach. The thing to keep in mind, everybody talks about this pause on the tariffs. If I understood it correctly, the tariffs haven't been paused. They've just been reduced to 10%. So there are tariffs in place with just about everybody on 10%, in addition to punitive tariffs on some parties, notably China. And if you go back to the history, Donald Trump has always thought that trade must be on the good side, must be level, and quote unquote, the U.S. gets ripped off. So 10%, in my view, has always been his end goal. The question really is, how will other countries react to this, and will they not retaliate with 10% in place? And I mentioned that in the context of today's rally because I think the market was rallying as if there were no tariffs put in place. The reason why it rallied as much, I think, has a lot to do with short covering that came on top of that. So to answer your question on gold was actually up substantially before Trump indicated this pause would be the case. Indeed, it weakened a little bit since. Now, obviously, it was up over 3% for the day, but I just want to make sure that context is known to your audience.
And that is a pretty significant move for gold, a one-day move of what, nearly $500 today.
Yeah. So on gold itself, right? We actually currently we're at 3,085. We were above 3,100, so we've come back a little bit. The futures are 3,099.80, so just below 3,100. It's been quite a roller coaster. The Wall Street Journal had a headline about some fund was up 20% in all this turmoil. Well, gold has been up substantially year to date, right? I mean, gold is up currently about, I think, 16% year to date, or so in that order of magnitude, 17%. It was up even more. So gold has served its role, but it was caught up a little bit in the turmoil in the last. I think it's been only a week since we've had this massive volatility.
It's hard to believe, but you're absolutely right. Now, what about gold, of course, playing its role as a safe haven, but also as a hedge against inflation. And the concern here, it seems, was that the tariffs would fuel inflation. What do you see fueling gold now?
Well, I think to how to think about it, tariffs can be thought of as supply shock. It's more difficult to get goods in because of the tariffs. And so at the same time, of course, and they might bump up prices, but economists shrug that off a little bit because it would be a one-time short-term thing. Obviously, consumers don't necessarily feel it that way, but economists are concerned about ongoing inflation. The real challenge for the Federal Reserve is if they lower interest rates in response, we'll have the same thing that happened in the pandemic. You have too few goods, and you stimulate demand. And the only thing the Federal Reserve can do is to push up prices in this context. And that's why the Fed is really in a no-win situation here. Now, if the tariffs are modest and whatnot, who knows? What we really need is, in order to get Trump's plan implemented, we need the carrot as well, not just the stick. The tariffs are the stick. We need the carrots, incentives to produce domestically, and then obviously we need some visibility here so that businesses start investing. My guess is that Trump is starting to pivot here towards the carrot, and then of course all bets are off what we're going to get. The question is how much confidence investors are going to have. But if judging from today, they do seem to take his word seriously with the rally we've had.
And the Treasuries, of course, also seen as a safe haven. The bond market certainly has seen a wild ride with Treasuries all over the place, and the yield in the 10-year note down 4.36%. Given all this uncertainty, there have been a wide range of predictions on the Fed's next move, whether they will lower rates and whether we'll have a recession and so forth. If you could put on your economist hat at the moment, what do you see ahead for this economy in the face of all this uncertainty?
Well, first on the bonds, Trump mentioned it today. He talked about the quote-unquote beautiful bond market. Apparently, some of the advisors told him just what you summarized, that the bond market has been all over the place, and some people have started to get a little bit concerned. Borrowing costs shooting up on the 10-year bonds in reaction to the tariffs. And obviously, with the markets as volatile as they are, who knows what the next turn might be. And so part of the motivation to throw this, to use the word carrot again, to the markets may well have been to appease the bond market. Remember, Bassett, the Treasury Secretary, today said, the last 4 years were about Wall Street. The next 4 years are going to be about Main Street, meaning he doesn't care what the stock market is doing. But what the Treasury certainly cares about, and the Federal Reserve cares about, is the bond market. And the bond market needs to, the Treasury cares about the 10-year yield, the Federal Reserve cares about what's called credit spreads, whether businesses pay much more than the bond market. And so whether we'll get a recession out of all this, nobody knows, because I haven't eaten enough popcorn to get that sort of visibility. Clearly, businesses are halting investments because of uncertainty. But we also see that with just a tweet or a social truth post or whatever it's called, you can change the course. And so it's really a question of what the long-term plan will be. And that's why I said at the outset, I think that this 10% base level is something Trump really wants. And so once the market gets comfortable with that, one can price it in. What's not good for the market is when the rules of the game change every day, because then people are not going to invest, and then we'll have a recession.
The Sean Ryan Show Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
What do you think of working with the SEALs? We went out every night going after bad guys. I was humbled.
There was no going back home.
I would be in another room crying because I was afraid to go to sleep because of what was coming for me in the middle of the night.
How long did it take you to be able to talk about
A long time. But I realized my experiences may help other people too.
the men like yourself that are considered legends in the community?
You're right.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
That is very interesting. We're on the air live with AXEL MERK, the President and Chief Investment Officer at MERK Investments, which includes the VanEck MERK Gold ETF. And, of course, you're focused on analog gold, as we sometimes call it here, versus digital gold, so-called, the cryptos, which saw that big downdraft recently and a rebound today. Any observations here on what's happening on the so-called digital gold front?
Well, Bitcoin was down earlier today, then it rallied strongly. One of the reasons why some of the the crypto investors have looked at gold is because the cryptocurrencies have acted more like so-called risk assets, moving with the market. Now, clearly, gold also was caught in the downdraft, but still, gold has that quote-unquote reputation as a safe haven. Obviously, the price of gold is still volatile, but one of the things I think I said on your show is that Bitcoin still needs to decide what it wants to be when it grows up. And so while a lot of people, of course, believe in the upside potential, people also want to have a quote-unquote diversifier to their portfolio, and gold has the better track record. I don't know what Bitcoin is going to do tomorrow. I don't know what gold is going to do tomorrow. But today's rally in Bitcoin again shows that it's moving together with the S&P, which is of course nice on days it goes up, but part of what people are looking for is diversification, so something goes up when other things go down.
Axel, thank you very much for taking the call on this history-shattering day on Wall Street and for the gold story as well. Axel Merk, the President and Chief Investment Officer at MERK Investments, which includes the VanEck MERK Gold ETF. He's an economist, also author of Sustainable Wealth. It's always great to have you with us, Axel. We'll keep an open line to you. We're going to add carrots to the popcorn now, and look forward to our next conversation. Thank you very much for joining us live here this afternoon.
My pleasure.
And out to the freeways now, 790 KABC. Mottek On Money continues here on 790 KABC. The tariff story's been weighing on the market heavily with a major sell-off we've seen over the past week and a big bounce back today. What's ahead now for the president's tariffs plans and the economy? And joining us live now, the one and only Ben Stein. Joining us live, economist, attorney, author of numerous books, and especially famous for giving that famous lecture on, guess what, trade policy in the movie Ferris Bueller's Day Off. He gave that lecture in one of the most famous scenes in American cinema, which he improvised, by the way, and he's joining us live here on the air this afternoon. Ben Stein, thank you very much for taking the call here.
It's my great pleasure. My pleasure.
You're sounding great, Ben, and thanks so much for taking the call. Give us your reaction to the tariff news, the big news today, and this big market rebound we saw here today.
The market will fluctuate. I think it was J.P. Morgan who was, when asked about the future of the market, said it will fluctuate. And it's fluctuating like mad right now. I don't think that people who are serious investors will pay much attention to how it goes one day at a time. As I always tell my friends, if they want to listen, buy and hold, and that's it. Buy and hold, and that's it. And my dear friend Frank, buy and hold, and you'll come out smiling at the end of the day. And the day may be very, very long. I mean, we're not talking about a 24-hour day or a 12-hour day. We're talking about a long day. But at the end of those days, you'll have done much better than if you didn't play that game. There's too much game playing. There's too much game playing, Frank, and that's true even of our president.
All right, let's talk about the tariff policy, and you're famous, of course, worldwide. In fact, it's all over social media now, the lecture that you gave during the movie Ferris Bueller's Day Off, which put people to sleep. You're not going to put anybody to sleep here now when you explain the 1930 the Tariff Act back in those days and your views on tariffs.
Well, tariffs are a means of economic warfare. There's no reason for us to be doing them. If people want to impose tariffs, fine. It does not have a very good record of working to help anybody get more prosperous. But if people want to do it just to make headlines, go ahead and do it. But don't expect miracles from it because you're not going to get them.
On your live with Ben Stein.
You're going to get aggravation. You're going to get aggravation. I mean, it's an amazing thing that even a guy as smart as Donald, as Mr. Trump, still is taken in by all that nonsense about how a change in tariff rates is going to work some kind of magic. It doesn't. It never does, and it never will.
President Trump certainly expressing confidence again today that his tariff idea will work to bring about results, especially as it relates to China and our neighbors to the north and south. So he's using it as a tool to achieve certain goals. Do you think it'll work?
Well, I don't know what the goal is. I mean, why are we mad at China for selling us good quality products at fabulously low prices? Why are we mad at them for that? They want to sell goods. They want to make money. Fine, that's great. Happy days to Mr. Well, I can't pronounce their names, but to them. But there's not going to be any miracles coming out of Beijing in the way of economic, earth-shattering events. It's just not going to happen. It never has happened. It's never going to happen. And, it's interesting. Mr. Buffett, who really knows things, instead of being a show-off, he knows things. He said it's a tool. Tariffs are a tool of warfare, of economic warfare. Why should we join in that game? Why? What good is it going to do us or anyone else?
All right. Before we let you off the hook, can you give us that lesson that you gave off the top of your head when you were teaching at Pepperdine and appeared in the movie there?
In 1930, the Republican-dominated House of Representatives installed into the laws of the United States of America a bill which raised tariff rates, and the idea was that by collecting extra money from those tariff raises, we would become a more prosperous country, and we would escape the bad effects of the onrushing Great Depression. Did it work? No, it did not work, and the U.S. sank deeper and deeper into the Great Depression. Now we are facing a very similar challenge. Should we go along with people who say that you can get something for nothing by raising tariff rates? I don't see why. I don't see why we want to raise something for nothing. Get something for nothing, so that China isn't doing anything bad to us right now in the way of selling us very good quality items at super bargain prices. If they want to do it, fine, let them do it.
All right. Anyone? Not just anyone. Ben Stein on the air live with us. Frank and Stein continues here live on 790 KBC. Ben Stein, great to have you with us here. Let's do it again soon. Stay tuned now for the 790 KBC News Blitz. Coming up next year, 790 KBC.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of The Sean Ryan Show.
September 11th happens. What is the first thing that went through your head?
September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope? Just learning how to find a new normal.
One of the most tragic events in American firefighter history. You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.